Hi, Jessica here with the Genung team and Real Broker. I'm here with my husband, Chris.
Hey, everybody.
This is our monthly market snapshot where we tell you everything you need to know about what's going on in this never boring real estate market of ours. We're covering the Murrieta, Temecula, Menifee market. And then we look at the broader national market as well. Realtor.com says inventory gains continue, but growth is slowing. Nationally active listings rose 17% year over year, which is the 23rd consecutive month of gains, but growth has decelerated steadily since May.
So that 17%, 17.0% number is really interesting because at our local level, we have basically 13 to 19%, and Temecula happens to be exactly 17%. So that's just a coincidence, but that is interesting to kind of compare nationally what's going on here locally.
Yeah, so we're on par with the national numbers as far as our inventory goes, which a lot of times we're not on par with national numbers, but it's still good to know what's going on in the broader market. Next, they go on to say that time on market extends further. So the typical home has spent 62 days on the market, a week longer than in September of last year. 62 days on market, that's about twice as long as in our area. We will get to that in our local stats, but we're hovering 25 to low 30s, so about half the national time to sell a home here in the Temecula Valley. Prices flatten with regional declines. The national median list price held steady at $425,000. We've been seeing that $425,000 median price nationally for quite a long time. We wish that was our median sales price here in Southern California. We're in an affordable area of Southern California, but our median sales prices, Menifee being our least expensive city that we analyze is, just under 600,000. Murrieta is basically 700,000, and Temecula is basically 800,000. So almost twice the national average if you're looking at Temecula.
But we'll see that when we get the local stats out. It is sort of flattening. We're up a little bit, but it is flattening in a similar way.
Price cuts remain widespread, especially at the lower tiers. According to Realtor.com, nearly 20% of listings saw price reductions in September. That's nationally. So that is a high number of price reductions and definitely more than we're used to seeing over the past many years. Back to active listings, and number of homes for sale topped 1 million for the 5th consecutive month. So number of homes for sale are up, but we are still well under the pre-pandemic active listing count. So you can see you've got 2017 here, this is 2018 and 2019. The active listing count is above our current year, just to kind of put it into perspective. Median days on market, this is a nice graph form so that it can really sink in, so you can really get an idea of our seasonality. Median list price in graph form nationally, it says that prices were flat year over year, down about 4% from June. Here is the number of homes that have received a price reduction. I like this graph as well. A lot of what do we call it? Wishful thinking pricing, and a lot of sellers. I think that it's a little bit unique to this year that a lot of sellers, the spring selling season, they were listing their home and what they thought was going to be the busiest selling season of the year. But then we had that little blip with the tariffs that really kind of put the market on hold for a little bit. So I think that's what happened. So they listed high because it's the spring selling season, and then had to reduce because there wasn't a lot of buyer activity going on with all the tariff uncertainty.
Let's finish up the Realtor article with the price cuts portion there, and we have the national in the black, and then they're just kind of showing us 7 buyers market. This article is really long. It's got all the regional and a lot of the cities in there. We'll put that link in the description for people to check it out if they want. Okay, the next information source here, we have Lambert. The 2 charts that we'll show them here, it's on the topic of pricing. So why don't you go ahead and dig into that?
All right, first chart is year-over-year changes in national home prices according to 6 major indices. These are all your big ones, your Zillow, your Case-Shiller, your Freddie Mac, that sort of thing. So we're hovering just barely in the green as far as the prices go. Kind of beating a dead horse here, but I love this chart as well because it really illustrated the seasonality month over month in U.S. home prices. And this one goes back to 1990. So this one goes back quite a ways. And you can see, in the middle of of the year. In the spring, you've got a lot of the dark blue, light blue. That's when home prices were the highest. And then as you get to the bookends of the year, so early in the year, January, February, later in the year, November and December, the prices often flatline or they come down. Oftentimes you'll see, November, December, you'll see these orange and red colors, which is showing price reductions. Later in the year is when I personally like to buy property. The downside to that is you're going to have less inventory to choose from, but a lot of sellers that are listing their homes November, December, January over the holidays, a lot of times they are particularly motivated, and I feel like you can get a good deal, and that does bear out in this chart.
Okay, let's move on to the next article. We have stalled existing home sales, dim hope for a fall rally, and I happen to put this in our weekly newsletter. What's your thoughts on the fall rally?
Yeah, so the dim hope of a fall rally is, my hopes of a fall rally are kind of non-existent. So yes, I have dim hopes of a fall rally as well. A lot of times we do see a fall rally, but that does not appear to be materializing, at least in our business. So our last batch of listings, everything that we had, we were slow. Our listings had trouble in the spring around when the tariffs were implemented. But once, everyone decided, okay, the economy, it's not going to collapse after all, things are moving forward. Like all of our listings sold through that batch of listings. And now we have a new batch of listings. And I will say that the activity on them has been slow, even though they're marketed well, they're priced fairly. Open house activity has certainly been down. Agent showings have been down. So everything, it's kind of almost feeling more like November, December as far as the activity goes. Like what's everybody distracted doing that they're not out looking at houses right now? Affordability, still very hard. Prices are high. Interest rates are still high. They've actually gone up a little bit these past couple weeks after, in anticipation of that first cut, they came down a little bit. Now they're back up, even though we are expecting another mortgage rate cut. It's like a all but foregone conclusion. It's like a 96% chance or something that they are going to lower again. We're in the dark about the jobs report and as far as economic data goes because of the government shutdown. So we'll have to see. Maybe if, they do release a jobs report and it's particularly bad, maybe it would even be higher than a quarter point. You would think that would be spurring mortgage applications, but it's not spurring purchase applications as of now. The housing slowdown, it should be lowering the housing prices, right? Well, that hasn't exactly happened, and that's the title of the CNN article. Here's why the housing slowdown isn't lowering housing prices. And it goes on to tell the story about a woman who was selling a home in Dallas. And this story, it really illustrates what we're seeing in our general market as well. So when she first listed the home, she was under the impression that people were still excited to buy homes and that they were getting snapped up pretty quickly, but she didn't get very many hits. So that's what we experienced in the spring as well. Buyers were not snapping up homes. It's still chugging along, especially if you're priced well, especially if you're in the great location or you're particularly good condition or you have the features. But, if it's just an average home, you got to make sure that you price it appropriately for, we've got fewer buyers than sellers at the moment. So the Redfin economist, he weighed in on this, and he says that a lot of sellers who aren't getting the prices that they're hoping for are choosing to delist their homes, or they're just keeping the homes on the market for a really long time, hoping that the market changes or a buyer comes along that's willing to pay the high price. Most sellers right now, I will say, are not very motivated. Most of them are not in a distressed situation. So a lot of them, if they can't get the price that they feel that their home is worth, a lot of people are pulling their homes from the market. Or maybe they're just not listening to their agents too. If you're really serious about selling your home, if you need to sell your home, this strategy of price high and hope for the best, the Redfin economist goes on to say that strategy really doesn't work because buyers are facing these high mortgage rates and they increasingly can't afford to pay both high prices and high interest rates. And I did go ahead and I ran. It's a good idea if you're thinking about listing your home to see see what buyers that are going to be looking at your home, see what their mortgage payment is going to be. I ran a mortgage payment on like the median Temecula home, like right around 810,000 with 20% down, which was, $160,000 plus down, including taxes, insurance, a little HOA. I just did $100 HOA or so. I think the payment, it was like $5,800. Like it's a lot, and it's almost, couple $1,000s more than you could probably rent that home for. So that's why the pricing is key right now, and affordability really is pushed for a lot of buyers. The last part about this article that I found personally interesting and agree with is that a record number of buyers are willing to walk away. So that's something that sellers really need to think about right now. About 56,000 U.S. home purchase agreements were canceled in August, or around 15% of homes. Cancellations in our area, they are up as well. I don't know if they're quite 15%, but they're certainly up. But the article is saying, CNN, that that's the highest August rate on record. And it goes on to say kind of where deals are collapsing. Inspections are where many deals collapse. More buyers are pushing for sellers to cover repairs or additional concessions, and sellers are refusing, according to the report. And I agree with that as well. A lot of times sellers, they don't want to do the repairs. They don't want to give repair credits. They don't want to give closing cost credits. But for buyers right now, where their affordability is already maxed out, they don't have room in their budget to then come in and fix the roof and fix the air conditioner, fix some big things, even cosmetic things. They want homes that are turnkey, ready to go for the most part, or have those items priced in. They don't want to pay a premium and then have to, plus this and that in their budget. So we're seeing that a lot, where, sellers a lot of times are not wanting to do the repairs, and a lot of them are actually not very expensive repairs. Like our vendors are quite reasonable. So I do recommend being a little bit more open to doing some repairs or making some repair credit concessions, because quite frankly, our inventory in our area, the median built year of a home, is probably in the early 2000s. So now we're getting around 25 years old, and we are seeing some major systems start to fail, some updating that's needing done. So I would recommend you consider accommodating the buyers within reason if you want to get your home sold quickly. All right, let's run through the local stats that we do every month. As always, we are looking at the cities of Menifee, Murrieta, and Temecula only, and single family homes to keep it simple. Median sales price for the first time in a while was up a little bit across the board of all three cities. So in Menifee, the median sales price increased $5,000 month over month, or 0.9%. Year over year, the median sales price was still down $10,000 or 1.7%. July of last year, 2024, by the way, was the peak median sales price in Menifee at $620,000. So we're $30,000 off the peak in Menifee at the moment. Median sales price in Murrieta month over month is up $5,000 or 0.7%, and year over year, it is also down, same as Menifee, $10,000 or 1.4%. The peak in Murrieta was actually in May of this year at $727,000. Temecula median sales price month over month has the largest gain by far. Temecula is always the most volatile. If you've been watching these for a while, it really bounces around. Month over month, it's up $35,000, the median sales price in Temecula, or 4.5%, and year over year, it's up $10,000. Menifee Murrieta were down $10,000 even, and Temecula happens to be up $10,000 even. So that's up 1.3% year over year, and that's a little bit off the median as well. The record sales price in Temecula, highest on record, was February of this year, 2025, at $842,500. All right, number of closed sales starting with Menifee, month over month, number of closed closed sales is down across all 3 cities. Menifee's is down 16 homes or 1.9%, and year over year, Menifee's number of closed sales is up 4 homes or 3.5%. Number of closed sales in Murrieta is down 14 homes or 13.6%, and year over year, it's up 1 home, pretty flat year over year, up 1.1%. Number of closed sales in Temecula month over month is up 14 homes. So Temecula is the odd one out, being up 14 homes or 14.6%. Year over year, there is an increase in the number of closed sales in Temecula, the highest of the 3 cities, up 25 homes or 29.4%. We personally think that the high activity in Temecula is because Temecula inventory had kind of started piling up. We had a high number of listings April to August in Temecula of over 400 plus listings. So we just think that this higher than normal or higher than over the past few years number of homes for sale in Temecula, it's just these homes selling through a bit. So that's why the numbers are up in Temecula. Median days active in the MLS. So how many days is it taking for a home to sell on the median in Menifee? It is down month over month 4 days. So it went from 29 days to 25 days month over month to sell a home. So still moving pretty quick, less than a month in Menifee. Year over year, it's taking 9 more days to sell a home. So year over year, it's taking longer across the board in all the cities to sell a home. Month over month, we're bouncing around. Median days active in Murrieta, month over month, it's down 4 days as well, same as Menifee. So it went from 31 days to 27 days month over month to sell a home in Murrieta. So again, less than a month. And off of that, 62 days or whatever we discussed earlier in the report that it's taking nationally to sell a home, we are about half that here. Year over year, taking 8 more days to sell a home in Murrieta. Moving on to Temecula, month over month, it's taking 4 more days to sell a home. So Temecula is going opposite the other 2 cities. So it went from 28 days to sell a home to 32 days to sell a home last month. Year over year in Temecula, it is taking 16 more days to sell a home. So Temecula, 32 days on market to sell a home is taking the longest, but again, it's about half of what it's taking nationally. Okay, active listings. This is our inventory for buyers to choose from. So sellers, this is your competition. Starting in Menifee, month over month, it is down 3 homes or 0.7%. Number of active listings year over year in Menifee is up 73 homes or up 19.1%. And that's at the top end of our range. We're ranging between up year over year number of active listings throughout the cities that we're looking at, anywhere from 13 to 19%. So Menifee's inventory is up on the higher range. Moving on to Murrieta, month over month, number of active listings is down 4 homes or down 1%. Year over year, number of active listings is up 48 homes or 13.5%. And Murrieta's inventory, the number of active listings, is up the least amount of the 3 cities that we're analyzing. Temecula's is right in the sweet spot. We'll go over that here. Number of active listings month over month is down 42 homes, a decrease in active listings of 10.2%. So that's a pretty big decrease month over month. But year over year, number of active listings is up 54 homes or 17%, which happens to be exactly the national number of active listings up year over year that we were discussing earlier in that Realtor.com article. And Temecula's 17% increase is right in the middle of Murrieta and Menifee.
All right, I'll jump in here on Temecula listings. The month over month decline of 42, I feel like that's just due to the fact that Temecula was so elevated for a big part of this year, so I feel like it's just selling through a little bit. And I'll go ahead and make a prediction. It's almost forecast time. So on October and then over to November, December, I feel like that Menifee is going to be, say, 440 in October, and then seasonally come down to around 400 in November, December.
Okay.
Murrieta, I'm going to say 390 this month of October, and come down to 350 by the end of the year. And Temecula, I'm going to call it 330 again, due to the fact that it's going to settle down a little bit, 330 and then be at 300 by the end of the year. So those are kind of my typical round numbers, 400, 350, and 300 on the 3 cities. So we'll see if I'm right the next couple months.
Yes. We shall see. That's a maybe, but as of right now, interesting because we're moving on to new listings. So this is going to be our future inventory coming up here. Number of new listings. Menifee is going opposite trend from the other two. So Menifee's new listings is actually increasing a little bit, which seasonally, like the other two cities, Murrieta and Temecula, the new listings are decreasing, which is normally what we see. But Menifee, for whatever reason, is increasing. And I do feel like the Menifee homes, they're having a little bit harder time selling through. I think just because they happen to have a lot of inventory at the moment. Number of new listings starting in Menifee is up 9 homes month over month or 5%, and year over year it's up 32 homes or an increase of 20.5%. You know, Menifee is the only one that's increasing in new listings. So again, Murrieta and Temecula are going to be decreasing. Murrieta's is decreasing month over month, 13 homes or 8.3%, and year over year the number of new listings is down 11 homes in Murrieta. Number of new listings in Temecula is down 16 homes or 12.5%, and number of new listings year over year in Temecula is down 15 homes or 11.8%. Months of supply, by the way, since we go over that pretty regularly, Menifee has the lowest months of supply at 3.6 months. So if there was no new listings to come to the market, how long would it take all of the available inventory to sell through? In Menifee, it's 3.6 months. Murrieta and Temecula are both at 4.1 months of supply. So that Temecula number, by the way, is down because in June and July, Temecula was well up over 5, like 5.4 and 5.6 months of supply. So the months of supply in Temecula is coming down, which the lower the months of supply, the closer we are to a seller's market. The higher the months of supply, the closer we are to a buyer's market. So the trends in Temecula is trending back towards the sellers at the moment. We'll see what happens next month. Hope you guys found these stats helpful. And if you have any questions, we're here to help. Have a good one. Bye.